Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Baxter International report. It's going to be a wild ride full of billion-dollar deals and maybe a hurricane or two. Hopefully their financials are more stable than the weather. Okay, buckle up because Baxter just dropped their 10K report, basically their year-end financial grades, and there's a lot to unpack. They make a bunch of healthcare stuff from IV solutions to hospital beds, so they're pretty important. First off, big changes. They reorganized how they run the company last year, calling it a new operating model. Think of it like rearranging the furniture in a house, trying to make things flow better. This led to some shifting around of their reportable segments, which are now medical products and therapies, healthcare systems and technologies, and pharmaceuticals. Now, the big news, they sold their kidney care business. This is like selling off a whole wing of that house. They got $3.8 billion for it from a company tied to Carlyle Group. This kidney care biz was all about dialysis, helping people with kidney problems. To understand this, you got to know they used to report their business by where it was located. Myrica's Europe, Asia, and this new change tries to sort things by the type of product it is, instead to make things more streamlined. And there's more. They sold another part of their company, Biopharma Solutions BPS business last year too, and they've been having problems with integrating a previous purchase they did called Hillrom. They're trying to make all these changes while avoiding mistakes and making sure everything keeps running smoothly. Of course, it's not all smooth sailing. They're dealing with the same problems everyone else is: inflation, supply chain issues where it's hard to get materials to make product, and all the general weirdness in the world economy, not to mention weather. All these changes and economic uncertainties have taken a toll, and their stock price has been jumping around quite a bit. There's no guarantee that they will not continue to reduce the amount of dividends they pay. They need to keep coming up with new and better products, or they'll be losing out to competitors. They have to balance the cost of making sure things are high quality and safe. They also have to source materials on time and keep their factories running, or they can't make money. Like every big company these days, they're worried about cybersecurity. Hackers are getting smarter, and a data breach could be a disaster. Of course, as a medical company, they have to play by the rules, and those rules keep changing. All these various rules could pose risks to the company. Basically, big changes are risky, and Baxter has made a ton of them. Adding to these challenges, Baxter also has a lot of debt, so a big chunk of their money goes to just paying that off. On the bright side, Baxter is working on innovation. They're trying to create new products and find new places to sell their stuff, all while trying to save money by being more efficient. This is a tricky balancing act, and there's the active portfolio management again, which means they might sell off or buy up new business units. They are also committed to paying down debt and maintaining their investment grade, which would let them borrow money at reasonable rates. They are committed to achieving a net leverage target of approximately 3.0x by the end of 2025. They really pride themselves in how safe their stuff is, so much so that if something is wrong, they take action. Now let's talk about their people. Baxter has around 38,000 employees. They're focused on keeping them safe, paying them well, and giving them opportunities to grow. Also, there's been a shakeup in leadership. The old CEO is out, and they've got an interim CEO while they search for someone new. And here's a plot twist. A hurricane hit one of their big manufacturing plants in North Carolina, causing a ton of damage and supply chain problems. Oh, and one more thing, like every big company these days, they're worried about cybersecurity. So the board oversees the cybersecurity, and the company has a cybersecurity incident response plan. They are also very keen to train their employees with phishing simulations. Now, about these cyber incidents, it's a mess. The board are constantly being informed, as well as the higher ups in the company, including the CEO, and they seem to have meetings every now and then on it. It was good before as well as now. Let's be honest, this company has it all. Oh, and there are lawsuits. Of course, there are lawsuits. Finally, there are always world trade risks to be worried about, such as the impact of tariffs and trade. Global efforts toward healthcare cost containment have also resulted in pressure on pricing of their products. Governments around the world use various mechanisms to control healthcare expenditures. So, what's the verdict? Baxter is definitely going through some big changes, mostly to cut costs and streamline the company. They're selling off pieces to focus on what they think will work best. That said, the anticipated benefits are based on assumptions. On the numbers, they're aiming for increased industry performance by ongoing debt repayments, portfolio management, and by paying dividends. However, there is a limited operational flexibility as the company deleverages. They're facing real risks from global events, regulations, and cybersecurity, not to mention the company could suffer reputational harm. From a value perspective, their market cap, the total value of their stock is around $17 billion as of June, but as of today, February 2025, it's significantly lower. Given all the moving pieces, I'd peg a reasonable price range at $28 to $32. There's a clear bullish direction for Baxter to be in. Thanks for watching. If you found this helpful, please like and subscribe for more breakdowns of corporate filings.